evening, good night, whatever time it is where you are. Here I am, back to tell you about more things, namely Bitcoin and what is happening with the price of Bitcoin. Well, it's just following the returns. That's what they do. And what has happened recently of interest on Bitcoin's returns? Well, yesterday on Friday, Bitcoin, that was the 13th of September, 2024, just so we're clear. Today is the 14th. And yesterday, the asset did exactly what I said the probabilities were likely to do. It closed above the mean. I said there was a higher probability that it was. There was obviously a probability that it wasn't. I gave you those very clearly in a couple different videos. And sure enough, it closed above. What did it close above? It closed above the 30 power mean, smoothing length 10. What is the 30 power mean, smoothing length 10? Well, that is an alpha trading log MA power mean. And what does that mean? Well, that means it is a mean of returns, right? Why does that matter? Well, it matters because assets only do two things vis-a-vis the means of returns. They distribute away from the means of returns, and then they revert to the means of returns. And we saw yesterday the reversion complete to that mean of returns and shoot up quite a bit above it by a few percent or so. And it closed the day above that mean of returns by a few percent. That mean of returns is currently at around 57.8K. And today, the day started around 60K and change and dipped down. And as long as it stays above that mean of returns today, that would be great. It is obviously better if it goes up a bit, but in terms of like getting more positive returns. But we know what happens when there's less humans around trading, putting their retail liquidity into the market because it's a weekend. There's still people doing it, obviously. But, there's a slightly higher percentage of robots trading compared to the usual ratio of humans to bots trading because it's a weekend. So what is happening? Well, as long as Bitcoin can stay above that mean of returns and find buy pressure if it goes back down there, then this coming week should be, in theory, good for longs, meaning good for buy pressure. If, however, it breaks back down below the mean of returns and begins to distribute away from the mean of returns to the downside, that will be good for more, for more sell pressure to the downside. Yeah. There's only two kinds of pressure, right? Buy pressure and sell pressure. And so the idea is, if Bitcoin can stay above the 30 power mean over the weekend, and even if it dips back a little, that'd be fine. If it dips back but stays above it, and then start the week off above that power mean, then that will mark several days above it. And if it can close that Monday off above power mean and specifically going to the upside, even if just a little bit, that will be very good for longs. Excuse me, I have some kind of a sneeze or something. Must be from the dust in the air around here or something. The autumn, changing of the end of summer, coming up on autumn. So, and again, if it falls below the power mean, then the probabilities will be good for shorts. As we say at Alpha Trading, the power means are bullies. Right? It's tough to break through them sometimes. But when they do, when assets break through those power means can act as great areas for or buy pressure or sell pressure. So in this case, it's now above. The asset is above that power mean. And that means that even if the returns dip back a little towards that 57.8K area, where that daily time frame 30 power mean is, then there's a very good probability that there'll be some good buy pressure around there. So if it closes above that power mean on Monday and in the upward direction, then that would be a very good indication that this week could see some nice movement to the upside. But here's the thing: if you look at the weekly time frame, there is a mean reversion happening to the 3012 RMLR, but there are third standard deviations to the upside of the 1110 RMLR band in the way. So if it were to rush up, it could fall back relatively quickly, unless it stays above that third standard deviation band for a number of weeks, which it could. But in any case, if it does that, at some point, if it were to fall, not if, when it is to go back below that third standard deviation band, then it would be heading towards mean reversion to that 1110 RMLR. Now, of course, we're still talking about the future here because it hasn't happened yet, and it could be still a number of weeks before that happens. But we're still looking at a time frame of somewhere between now and even March, where the asset could hit above six figures. And it doesn't have to happen in September or October or November or December or ever, really. But there is an increasing probability that it will do that at some point in the next several months. How do we know that? Well, because it is in mean reversion to that RMLR. And for the time being, that RMLR is basically moving kind of sideways, up and down a bunch, yeah, but pretty much it's going up for the next several weeks, and then around middle of October, it's going to be basically going sideways for like the next 25 weeks or so. And that means that reverse mean of log returns will be fairly high and will be at an area where a lot of people think there's going to be a big significant movement when the price hits six figures. Right? That movement could easily be a mean reversion to the downside, and it could also be a continuation to the upside. It really depends on what the buy pressure will do at that point, and the sell pressure, whether or not the buy pressure will cave or the sell pressure will cave. One of them will cave more than the other, and that is what we will see. We'll see which side basically gets the win for that period of time. Of course, along the way, there are a lot of opportunities to exploit, and that means that we're going to be seeing a lot of scalps being done. We're going to be seeing a lot of people trying to swing trade, usually with over leveraged positions. They should not be swing trading. Right? They're going to be getting wrecked while the asset goes to the upside. They're going to be getting wrecked when the asset goes to the downside because they don't have good, proper risk management when it comes to trading. Now, why is it that people don't have good risk management when it comes to trading? Well, it's usually because people are taking risks they can't afford to lose, and they feel like they need to make the quick win now. And if they don't get the quick win now, then they're kind of up a creek without a paddle, right? And so in order to avoid that kind of situation, the general aim is to trade low time frame volatility and scalp as many scalps in a trading session as you can and not use leverage, right? So if trading Bitcoin is, beyond your capacity because it's too volatile and you don't have enough capital to trade it without significant leverage, right? And that doesn't mean you can never use leverage, right? I'm just saying it's obviously less risky if you don't use any leverage. But like if you do use leverage, first of all, you should know how to use it properly. And you should be aware what it does. And every time you add on more leverage, what does it do? It pulls your liquidity, it pulls your liquidation point closer to your entry. Right? So if you go up to even just 10x, suddenly your liquidation point is at 10%. Right? In fact, if you go up to 10x, your liquidation point is really more like 9.5%, depending on if you're trading like most people do, using market entries, which as a real trader you should not be doing. Right? You should be using limit entries and limit exits as much as possible. But that is a question of whether or not you trade according to wise trading strategies or whether or not you just take crazy risks and you just say, I don't care about the market fees. I just want my order filled now. And you want that instant gratification, which of course is going to cost you on the flip side with your profit, because when you take a market entry, you're basically paying premium fees for that privilege of having your order filled right away. Whereas if you run limit orders, you get much better fees, right? Much, much better. This person's going the wrong way with their car. Boy. So the question is, can Bitcoin stay above this power mean? And can you trade the winning trades regardless of what direction it goes? Right? If Bitcoin does not stay above the power mean, if it falls back below, it's a clear indication, right? Especially if it closes a daily candle below it, that it wants to go back to the downside. But if it stays above it now, right, even if it dips down a little bit today and maybe goes sideways and even a bit further down tomorrow, or maybe a little bit up on Sunday, but it doesn't close above where it closed yesterday when the traditional markets closed, then by the time the CMEs open, right, when the new candle for Monday is getting ready to open, right, then we'll see, first of all, what the new weekly timeframes give us, and we'll see what the new daily timeframes give us, and whether or not the asset is above that power mean or not. And if it is, like I said, if it stays above that power mean and it continues to head up on Monday, right? Obviously, as a low time frame scalper, we're looking at much lower time frames to actually scalp. But as a just looking at the bigger picture on the weekly and daily, if it continues to move up on Monday and stays above that power mean, that is very good for seeing a healthy trajectory to the upside. And it's just as healthy a trajectory if it goes to the downside, in my opinion, because as traders, we really don't care what the price is, and we really don't care what the direction is. We only care about being on the winning side of the trade, right? And then stacking sats when we're done with the trade. And every time you win a trade, the idea is you have more capital for the next trade. So that's why it doesn't matter if your trade wins you a 0.5%, 1%, 2%, 5%, it doesn't matter. Take the trade and take the profits early and often, right? Don't take the trade, make the trade. Be a market maker. Think in that mentality. Make the trade and take your profits early and often, and limit your loss. So if the trade goes against you, just get out of the trade immediately, right? Even if you're in profit and the trade starts going against you, and you've hit a target, like a standard deviation or a Laplace distribution level, or a VRE level, right, or an AVQ level, just get out of the trade. There's no point in being greedy. It will always be the next trade. Right? If it's going up and you take your profits and suddenly it's starting to shoot down Well, if you're fast enough, you can catch the move to the downside. If you're not fast enough, you can wait for that move to end, and then you can always take the next trade, whichever way it goes, whether it's more down or reversing back to the upside again. Like, we don't care about the direction as long as we're in the right direction, the winning direction. Right? And the last thing is, of course, don't be emotionally attached to your trades, because that is the single biggest mistake people make when they're trading. Right? They get in a trade, it goes the wrong way, it goes against them, and they're upset. They're sure they're right. They're sure that if they wait a little bit longer, it's going to turn around and go back in their favor, and then it doesn't. It gets worse and worse, and they suffer more and more pain. And there's no need for that. Right? It's better to just take the trades, make the trades, take your profits early and often, limit your loss, and don't be emotionally attached to your trade. It's 3 basic rules, and it really all comes down to risk management. Because, like I said, risk management is basically like 90% of your strategy, right? And the rest should be based on the VEPs, right? I mean, risk management is knowing how much to put on the table for a trade and how much to take off when you get out of the trade. I generally like to take everything off. I don't like to leave open positions with half the amount and stuff like that. Laddering in and laddering out. I've done that, whatever. I prefer, if I'm entering a trade, I enter the trade. And if the information of the VEPs is telling me this is going to the upside, I put all my stack that I want to trade with to the upside. If for some reason I decide I need to counter trade it, right, then I'm going to put like a quarter of my stack to the downside if I'm counter trading what the VEPS says. By the way, the amount of times I counter trade what the VEPS is saying is like 1 in like 50 times, maybe, maybe even less. I generally just do what the VEP says. I don't usually try to counter trade it because there's no point. I consistently trade what the VEPS is indicating, and it's usually right. Or my trades are usually correct because I'm not trying to second guess what the math is telling me. Sometimes geometric Brownian motion happens, and yes, the information is saying it's going to go up, but then geometric Brownian motion happens or something else happens, and actually it goes down. Well, that's when you need to know you need to get out of the trade, right? But I generally don't have to counter trade at all. Right? If I had to counter trade, really ever, right, and or at all on a consistent basis, then that would mean that the tools weren't any good. So the only time I counter trade is not when the information is saying I should counter trade. No, it doesn't tell me I should counter trade. The information tells me what I should do. It's a matter of whether or not I feel I should counter trade. And more often than not, those are extremely fast trades because I'm not really comfortable sitting in trades where I'm countering tools that I know work pretty much always, right? So I generally don't counter trade our tools. And like I said, if I do, it's like 2% or less of the time. And I'm in and out of those trades usually extremely quickly, like, a minute or sometimes less, sometimes a bit more, but, I'm certainly not doing that many times a day or a week or a month. Not at all. If I counter trade, it's like once every month or two on the time frames I'm trading, which is like the 1 minute. So anyway, if you want to learn how to trade with the VEPs, you can do that for free. Just go to the Alpha Trading Discord. The Alpha Trading Discord is located at alphatraడింghq.com/discord. There, you can ask for the free volatility starter kit, which will get you the indicators you need to learn how to trade the VEPs. And you can also get the free cheat sheet, which will teach you the tendencies that you need to know to learn how to trade volatility properly. That's going to do for now. Happy trading. Cheers.